We've got a lot of ground to cover with our next guest. Equity and credit markets, emerging markets, the Fed, currencies, real estate, and why he expects a correction in the S&P 500. Joining us right now is Rob Citrone. He is the founder and portfolio manager at Discovery Capital Management. That's a hedge fund that invests in public and private markets with a particular focus on emerging markets. And by the way, they manage, I'm told, around $3 billion in assets under management. Incredible performances the last couple of years, too. Rob, thank you for joining us this morning.
Great. Thank you very much, Becky and Andrew. Great to be here.
I hear that you're up better than 50% back-to-back years. I think it was 52% gain from last year. What do you see happening right now that makes you think there's a correction coming in the S&P 500?
Well, we've had a great start to the year with a lot of turbulence, but the markets have recovered tremendously. And I think we're going to have a mini April. So, we had the tariff issues. They're coming back. I mean, tariffs are messy. It's not going to be like April, not going to be quite as difficult as that.
You mean the July 8th and 9th deadlines that the White House has imposed?
Absolutely. And the discussions with Europe and Japan and others are still very difficult, right? I think we're doing the right things and trying to get fair trade. But to get there, it's difficult. And structurally, it's tough things have to happen. So I hope we stay tough. I think
you hope that the president sticks with these and doesn't push back and say, we'll extend the deadlines?
I hope that we use this opportunity to change trade the way he's talked about. I don't think we're going to have high tariffs ultimately, but 10 to 20% and get rid of a lot of the non-tariff barriers. But I don't think it's going to be just smooth sailing and trying to get resolution to these things.
Is part of your hope with thinking that you want him to stand with these things, it's how you've positioned your portfolio, expecting that there will be some tough days ahead still? I
think it's the best thing for the country. I mean, we adjust. We had a good April, had a good May because we made adjustments to the portfolio. But there's more than that. I think the other thing is that we see interest rates starting to back up from here. So I think interest rates are bottoming as we speak. And I think the 10-year is going to go to 5 to 5.25 between now and the end of the year.
Oh, really? Say why?
Because inflation on core rates, core inflation is going to go from 2.8 in our numbers to 3.5 by the end of the year. And the U.S. economy is picking up. I mean,
so therefore, you don't think when the president said this goes back to what we were debating with what the president's been out there saying too late Powell. You think Powell's got it right? Is that what you're suggesting? And that
I think
the president shouldn't be touching anything.
I think Powell has it right. The one thing I wish the president wouldn't do is criticize the Fed as openly as he does. He can talk to him privately, but openly, I think that's damaging.
But even beyond that, and that's a real question,
sure,
whether that should even happen. But do you believe that interest rates should be at higher levels? Meaning, do you think that if you were the Fed, what would you privately be saying about this?
I think I'm the Fed. I think they stay the course. Cutting rates, I just don't see it. I've been saying to our investors for 6 months, there's no way the Fed's cutting rates this year because inflation is too sticky. And inflation is too sticky because we still have $2.4 trillion that we printed since COVID that we haven't taken out of the system.
But by the way, how much do you already say to yourself? This goes back to the shadow Fed idea. At some level, I think this market's already saying to itself that come next April, May, that there will be lower interest rates. And there will be lower interest rates because somebody else will be in this job. And that person's sole responsibility and first sort of loyalty test is going to be whether they lower the rate.
I think that's very risky. I think the Fed needs to do their job and be independent. And if we go,
what do you think's baked into the cake in terms of what the investor class
Well, the market's thinking over 2 cuts.
Right.
And I think there's no cuts. So that's another thing that's going to add to, I think.
But you're saying 2 cuts compared to no cuts for the rest of the year, or you're going out 12 months?
I think no cuts the rest of the year. I think out 12 months, it's a little bit more difficult. But I don't think any cuts because the economy is going to pick up. I mean, one of the things that we see happening is that there are companies coming to produce here in the United States because of tariffs. There are companies who have production here already. They're expanding them because of the tariffs. So when you go and talk to office park managers now, they're full. LOIs completely signed up. So we're going to have a boom in this country next year.
Where are you?
The other thing is that the big, beautiful bill is going to be a big stimulus, especially for consumption at the low end, because you're going to give back a huge amount of refund to retirees who pay tax and Social Security. So the tax effect is actually this year in the sense that they're getting the refund for the taxes they paid this year in March and April of next year. And they don't even know that yet. As soon as they know that spending is going to occur, and then no tax on tips, no tax on overtime, these are big things from a consumption perspective. So I think we get investment. I think we get consumption. I think the slowdown we've had is a bit of a fake slowdown in the sense it happened because of uncertainty around policy. And that uncertainty will gradually over time.
I hope you're right about all of this.
Yeah.
Well, I feel pretty strongly about it, so we'll see.
Why do you think the dollar is down 11% year to date without us even cutting rates? Is it anticipation of those rate cuts, or is there something else that's
No, I think it has 100% to do with the fact that everyone owns so many dollar assets, and foreigners are beginning to hedge a little bit of their exposure, and some investors in the U.S. are beginning to look abroad. I mean, we're incredibly bullish on Latin America, as an example. So, you know, when the Deep Sea came out on the Friday afternoon with their paper and talked about, you know, they spent less than $1 billion and all the specs they had on their program, you know, on Monday, so NVIDIA fell to, what, 12, 14%?
Yeah.
It fell by, its market cap change fell by 2 Mexicos. I mean, that's how cheap the Mexican market is. That one change in NVIDIA stock is equal to 2 times the market cap of Mexico. So there's so many other opportunities outside of the United States that I think investors are going to take advantage of.
Why Brazil?
Well, Brazil, I think, is a little bit trickier. I mean, Brazil has a big election coming up in 15 months. So the country that we've been really bullish on is Argentina, which has had massive shift, right? You've gone from, when we invest in countries, especially emerging markets, it's like when you invest in a company, management's the key. And management in emerging countries in particular is critically important. And what are their policies, and can they implement them? And you've gone in Argentina from the worst policies, left-wing, you know, socialist policies, to probably the gold standard in terms of economic policy. So that shift and change creates a massive shift in asset prices. So you saw a 400% increase in equity prices. You saw bond prices double. I think that's going to happen in a lot of countries in Latin America. You've got 4 major elections this year. You have Peru, Colombia, Chile, and Brazil, next 15 months. And all of them have left-wing governments that are going to go right of center, probably. But Brazil is the most difficult to predict because Lula still has a chance to win. And you're still 15 months away, and he's going to implement a lot of very populist policy between then and now. So we're being a little bit cautious in Brazil. On a pullback, we would add in Brazil, but Argentina, Peru, and others, we're already there.